But I do know that the demand for gold is likely to get out of control, if you like, want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit. If you want to store a value, then you've got to go into gold, and someone put it for small change into silver. So that's basically where you go.
The dominance of the US dollar in global reserves is gradually declining as countries seek to diversify away from the greenback. According to data compiled by the Atlantic Council, the share of dollars in global reserves has decreased by 14% since the beginning of the 21st century. In 2002, the dollar represented 72% of global reserves. Today, its share has reduced to approximately 58%. This shift reflects a growing trend among nations to reduce their reliance on the US dollar and explore alternative currencies and assets for their reserves. Also, the Russian ruble weakened slightly against the dollar, and China's yuan weakened on Wednesday in a thin market. According to an analysis of the OTC market, the ruble weakened by 0.4% to 12.23 against the Chinese yuan, which has become the most traded foreign currency in Moscow. Alasdair Macleod, a former stockbroker and banker and currently head of research at Gold Money, as well as the author of his own Substack, strongly advises moving out of credit and into hard assets like gold. He highlights the dire financial situation of the U.S., noting that central banks are effectively insolvent and that inflation driven by massive budget deficits is far from over. Macleod also points out that China is increasingly concerned about its U.S. dollar holdings, leading them to reduce their exposure to the dollar and accumulate gold instead. Central banks are increasingly moving away from the U.S. dollar and Chinese yuan, instead accumulating gold as a stateless currency, amid rising geopolitical tensions and global economic uncertainties. Both Russia and China have been purchasing gold at an accelerated rate as part of their strategy to diversify their foreign exchange reserves. Gold is favored for its safety, liquidity, and return characteristics, making it an attractive alternative to traditional fiat currencies. Since 2013, Russia's gold reserves have surged from 1,035 tons to 2,333 tons by 2023. Similarly, China's gold reserves have grown from 1,054 tons to 2,235 tons over the same period. This shift highlights central banks' efforts to hedge against potential risks associated with major currencies and enhance their financial stability through gold. Macleod warns that demand for gold could spiral out of control before the average American, European, or Brit realizes the impending collapse in the purchasing power of their own credit. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
Get the hell out of credit. I mean, if you look at the dollar, look at the euro, look at any of these currencies, and all you can see is disaster. I mean, putting to one side the developing World War III, which hopefully will be avoided, which one of the other guests, actually, Gilbert Doctorow, specializes in following very, very closely, and I'd recommend people to tune into his Substack if you really want to discover what's actually going on with the war rather than what we are told in the mainstream media. And I mean, basically, the central banks are all bust. They're all in negative equity if you account for it properly, for all the bonds they have bought at far higher prices than the current level, with yields far lower than the cost of financing their holdings. We've got commercial banks are trying to reduce their exposure to risk, and that means that zombie companies are going to be threatened. The inflation story isn't over, I mean, just the root of inflation is basically budget deficits, and with the next president of the United States, and I don't care who it is, that deficit is going to increase. You're looking at a budget deficit, I think, perhaps in the next fiscal year, starting from September, of over 10%. Now, that just feeds into inflation. It feeds into a fall in the purchasing power of the dollar. And other countries are in exactly the same position. In fact, the dollar is probably in the worst position because it's got a debt to GDP, government debt to GDP, of around about 130%. And that is a debt trap, particularly when the two major foreign holders, China and Japan, are net sellers. So do you want to really hang around in credit, which is basically currency, People tell me currency isn't credit. Well, it is. I mean, just look at a central bank's balance sheet. You've got the currency on there as a liability. That is your counterparty. They're all bust. So, yeah, get out of credit. And where do you go to? Where do you go to? You go to real things, perhaps, some real things. But if you want to store a value, then you've got to go into gold and put it for small change into silver. So that's basically where you go. I mean, we're already in recession. I think it's very, very simple. And as that gets worse, because recessions don't just stop, I mean, it is going to get worse with all the banks with their balance sheets over leveraged and all the rest of it. They're not going to provide extra credit. I would say that it's very likely that this, the deficit situation, budget deficit situation, is just totally out of anyone's control. And that is, and how are they going to finance it? Again, I come back to this problem. They're in a debt trap. 130% debt to GDP. China has decided that it's reducing its involvement with dollars because, and this is for geopolitical strategic reasons, though I would guess that the people in the PBOC who are not idiots can see what's going on. They will be making a similar assessment to the one we're discussing right now, and basically will want to get out of dollars as much as possible, as quickly as possible. That is why they've been buying gold. Now, they haven't stopped buying gold. They've said they've stopped buying gold, but do you trust what they say? Never trust anything a government says or a government department says. So, but I do know that the demand for gold is likely to get out of control, if you like, want to put it in those terms. Before the average American, the average European, the average Brit wakes up to actually what it's all about, and that is the collapse in the purchasing power of their own credit. Get out of credit.
Following the recent weakening of the ruble, gold has reached new all-time highs, while the US dollar has fallen to a 7-month low. Gold prices are soaring to record highs as investors turn to the precious metal as a safe haven in anticipation of a Federal Reserve interest rate cut in September. Gold currently sits above $2,500 per ounce, meaning a single bar of gold costs $1 million. Macleod notes that the chart has broken out of a very bullish consolidation pattern, characterized by an upward-sloping flag that found support on the 55-day moving average. This pattern is highly bullish, suggesting a potential price move to $33,000. Macleod emphasizes that this isn't a forecast, but a reflection of what the chart suggests. Let's now turn our attention to the video again.
Well, basically, I don't make forecasts. What I was doing was merely saying what the chart is saying, because it's broken out of a very, very bullish consolidation, an upward sloping flag, which found support on the 55-day moving average. It's very, very simple. It's a very bullish chart, and it's just a question of measuring in, the move into the flag and adding it to the move out of the flag, and that gives you $3,000. I mean, this isn't a forecast. This is just what the chart says. And I would conclude, I think the big bullion banks have probably got their books square or got some gold on the books because they understand what's going on. The JP Morgans and all the rest of it. They're members of the Shanghai Futures Exchange. They do have the intelligence, which is almost as good or perhaps better than government intelligence. So, those big boys, I wouldn't worry about them too much. But I think there are a lot of the smaller bullion banks who are probably getting into trouble on this rise. And this is really reflected on COMEX in the shorts. There are obviously positions in London as well. The positions in London are far larger usually than they are on COMEX. But the different nature of it is that COMEX is perhaps more volatile in terms of what's price and the way in which the relationship between the managed money, which is the hedge funds, and the swaps, which is the majority. The majority of swaps are bullion bank trading desks. They whip things up and down quite a lot. London, I suspect, is less volatile, but bigger volumes. But the point is that the short position, the swap's short position, is around about $70 billion. It's roughly $2.5 billion each. Now, that's an average. That's a hell of a position, really. It's a record. And they can't claw it back. Now, sooner or later, one of these, because remember that 2.5 billion is an average. I mean, there are going to be some a lot less and some a lot more. Whoever it is who's got a lot more, I think has got a problem. And as the price goes higher, and as the hedge funds go in and buy even more contracts, which are created in effect by the swaps, but they're bound to be one or two behind the scenes crises, which we will not be privy to.
In a recent tweet, Robert Kiyosaki highlighted the enormous scale of U.S. debt, comparing $1 trillion to 31,688 years in seconds. He pointed out the alarming rate at which the U.S. is accumulating debt, adding $1 trillion every 100 days, bringing the national debt close to $35 trillion. Kiyosaki also warned against relying solely on FDIC insurance and the banking system, urging people to invest in tangible assets like gold, silver, and Bitcoin to protect their financial futures. What is your stance? We want to hear from you. Feel free to leave your thoughts in the comments. Give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.